Hi, Tom Lydon here in Chicago at the Charles Schwab Impact Conference, and I'm here with Rolf Agather, Ken O'Keefe, FTSE Russell. Gentlemen, great to see you.
Great to be here.
Great to be here, Tom, thanks.
Another great year for ETFs. Rolf, talk a little bit about some of the factors that have gotten your attention, maybe some of the trends that you've seen in the ETF space.
Yeah, obviously there's a lot of discussion around factors and giving investors the ability to manage their portfolios more specifically. Pretty big change this year. Last year was probably more of a value factor environment. People looking for bargains as markets continue to go up. But this year there's actually been more story about quality. So even though markets are going up, there's still some concern, some defensiveness about the markets and how long they can keep going. What's the Fed policy going to be? So people then start to look for stronger balance sheets and just higher quality companies in that type of environment.
Are you seeing with all these additional choices that advisors who have embraced ETFs are moving away from some of the traditional cap-weighted indices and now starting to sprinkle in more factor strategies?
I think they're definitely some of the newer products. We just actually had a partner of ours launch a number of new factor products, but we also still see a lot of interest and acceptance of the traditional products as well. So it's just a much wider menu for advisors to choose from.
Well, it's important that everybody realize that we wouldn't have the ETF business if it wasn't for indexing companies like yours to be able to structure these indices that we can wrap ETFs around. And you kind of touched on this partnership. Just recently, a couple big companies launched some suites that you folks partnered with to provide that underlying indice.
Yeah, that's exactly right. There's a big trend in the industry of active asset managers getting into the ETF business, and two good examples of that are Oppenheimer, as Rolf mentioned, on the factor side, and then Franklin Templeton coming in with a suite of single country indices. Yeah. And that interesting trend is those active managers are bringing new insights into the ETF business and new blood into the ETF business, and really pushing the two areas that are growing the fastest. That is smart beta in terms of Oppenheimer and Franklin Templeton, that low cost equity, to be able to get developed markets for 9 basis points, emerging markets for 19, really exciting.
Right, so prices continue to come down for sure. Oppenheimer in not only giving single factor, but they also have multi-factor strategies. So if you want to layer in a certain factor based on the current economic environment that might seem right for you, or if you feel the factors in general could work, they provide a disciplined smart beta strategy there as well. Is that right?
Absolutely, 100%. So Oppenheimer's provided a suite of 6 single factors based on the Russell 1000. So think of quality, size, yield, and so on. Yeah. But they also provided 2 dynamic factor suites, one based on the Russell 1000, the other one based on the Russell 2000, that actually adjusts as the macroeconomic regime changes in the economy.
Great, so you get it on the large cap and the small cap side.
Indeed.
Excellent. And then with Franklin and single countries, boy, we've talked a lot about valuations here in the US, maybe getting a little bit toppy, we're not sure, but there's great opportunity overseas, developed and emerging, right?
Oh, it allows investors to really look for, what are those markets that aren't overvalued right now with everything being a bit toppy, or if you're looking for a yield play, there might be certain countries that have a higher yield than the US or abroad markets.
Yeah, absolutely. Yeah. Well, gentlemen, you guys do a great job. Keep up the great work. It keeps us all excited. And thanks for stopping by.
Fantastic. Thanks so much, Tom.
Thank you.